How are we doing this afternoon? It's the second day of TOKEN2049. I mean, if you're tired, it's not surprising, really. And with these conferences, can tend to go on a little bit. I want to thank you all for at least joining me here and learning a little bit more about why I like hacks or love hacks. My name is Rupert. I'm from a company called Amulet. It's right there up on the board. What you don't know about me is I've already put the title that I love hacks, but I really, really adore hacks. Now, that might sound like a bit of an inflammatory comment, given the state of the industry that we're in right now. We see them every week coming up and going away. A lot of money has been stolen. Well, let me explain a little bit more. It's a bit of a love-hate relationship that I have with the hacking industry or the hacking part of our industry. And there's a very good reason why it's good for me, which I'll come to in a second. But before I do that, I just wanted to check how much money do you think was stolen in DeFi last year? Take out the exchanges, take out the actual chain revenue. How much money was stolen in DeFi last year? Any number? David, what number? 500 million. Wow, you're pessimistic. It's lower than 500 million, so I can tell you that. Give me another number over here. Hack on. 89 million. It's higher than 89 million. Sorry, I think he said 500 billion. 89. It's in between. I'm going to pull off the bandage. What? 150 million? Okay, I got it. Guys, I'm going to give the actual figure. It's $12 billion. Okay, right. So the one thing that happens at conferences like this, and in crypto in general, is we throw out these big numbers all the time. It feels like somebody's raised another 4 billion here, somebody's spent another 500 million there. So I want to put that $12 billion into context. So another question. That was different to my image that I put on the deck, but thanks for changing it, guys. The question is, how much revenue did the DeFi industry make last year? So you got to shout loud. I'm going to start with you again, young man. Less than 10 million? Oh, it's pessimistic. It was more than 10 million. So higher than 10 million. We've got 500 million, more than 500 million. I can give you the answer. The answer is $24 billion. So the whole industry made $24 billion. We got stolen $12 billion. If everybody could do those maths pretty quickly, that's 50% of all the revenue that we made last year was stolen from Web3. And that's pretty staggering when we start putting those numbers together. So I realize I've yet to tell you why I love hacks. And, well, my new best friends, Amulet is here to protect the downside risk. That's what we do. Amulet's a DeFi cover protocol. We're built so you can build any sort of cover, any sort of protection on top of our protocol. Now, we're starting with stablecoin depeg and smart contract risk. And the future for us is extremely bright because Amulet is also the first change in the insurance and cover protocol industry for 300 years. We've been doing it exactly the same since some old boys back in London, in the Lloyd's coffee shop, set up how the insurance industry should work. And we are the first chains. So how do we do that? Well, we do it with the PCR, of course. Now, no doubt you've got your pamphlets. You've already read up on the PCR. Everybody knows what the PCR is, right? No? Nobody knows what the PCR is. It's like a Punch and Judy act, this. All right. The PCR is not what makes time travel possible, I'm sorry to say. This is my favorite picture of the flux capacitor from Back to the Future. Before I tell you about the PCR, I've got to explain how the industry actually works and why it's a bit of a paradigm shift for what we're doing. So DeFi cover is a two-sided marketplace. You've got on the one side people who come in and stake their capital. Now that staked capital filters into the underwriting pool, and it is the underwriting capital for the policyholders on the other side. And then, of course, if there's a claim, it comes out the underwriting pool and the state capital. But that is actually also the bit of the problem, because you get this decision-making process of like, how or who you're going to disappoint. Now, the slides have gone a little bit awry in the presentation, but you get the point. Our guys who are taking out the policy, if you pay out their claim, they're going to be very happy. But the people who have staked into the protocol are extremely unhappy. It's their money being used to pay out that claim. On the other way, it's also true. You don't pay out the claim, you don't keep to your morals, you don't do what you're supposed to do as a cover protocol, and you make your stakers very happy, but only for a very short time because their premiums are going to drop and they're not going to be able to get the returns that they were expecting. So it's kind of like arguing with your wife. Nobody's going to win from this scenario. So how do we fix that problem? Well, that's where we come into it. So we take staked capital, and we put that staked capital into a Solana proof-of-stake validator. Now, that's very important, not only for us, but also for Solana, because it runs the blockchain. And it's not just Solana. I want to point out we're a multi-chain solution, but that's the one we're built on right now, and this is how we're running our system. So we're going to stick with that for a second. So that bridge runs the blockchain. It provides us a yield, and it's that yield that we then put into, you remember it, the PCR, the protocol-controlled reserves. This is the central, most important point about what we're doing here at Amulet. Now, if I put in the rest of the slide, you can see the rest of the system's exactly the same. Policyholders get their claims. They pay in their premium into the protocol-controlled bucket. But the key thing is we have this protection, this layer of separation between stake capital and what is the underwriting capital in between, because we're using the yield and not the principal. If you put in $100 into this system and it generates $6 out of the proof of stake validator, it is the $6 that is risked, not the principal. My slide's gone awry again. But anyway, you get the picture. This means on both sides of the protocol, we're making people happy. We're coming true with what we can do. And we can make a lot more people happy as well, because we are a community DAO-run initiative. And it is an ability to govern ourselves in a decentralized way that helps everybody in the Amulet protocol. So in other words, we're solving one of life's great problems. Maybe not the arguments with my wife, but certainly some of the things that we're doing in DeFi cover. And for the first time, ladies and gentlemen, I'm very, very excited to share that Amulet Protocol goes live today. After 10 months of hard grind and extensive audits, the protocol goes live at 2 p.m. UTC. It will be live to the public on the Solana chain. And for the first time, it's also enabling Solana users to get cover. They've never had this before with a native DeFi protocol on their chain. And we're going live with, you can probably see the logos up there, but with Radium, Orca, Solend, Port Finance, and Tulip. Now, there's many, many more to come over the next few months. In fact, this is really the start of a very long journey for us, because we're going to be adding dozens of protocols to our product. We're also going to be adding in stablecoin staking. So rather than staking in Sol, you have to be able to stake in USDC. NFT cover, wallet cover, custodian cover, alternative chains. And alternative chains is extremely important. I said earlier that we are a multi-chain solution. But it's much wider than that. We have to protect everybody with inside Web3. And if anybody's going to do it, I guarantee you it's my team at Amulet that are going to do it, because I am extremely bullish on them. And I've seen what they can do in the past 10 months. So I urge you all this evening, when it gets to about 2 p.m. UTC, or do it in the morning. Don't worry. Go out for a party tonight, guys. Go over to amulet.org, check out the platform. If you own any Sol, please stake it in our protocol. That's not financial advice. That's just doing me a favor, really. Believe in the system. Believe in what we're doing. Believe in the mission that we're trying to achieve. Because I don't want you guys to miss the opportunity to say, I was there. I was there when Amulet started. Because in 10 years' time, believe you me, this is going to change what the insurance and the DeFi cover industry is doing. Thank you very much for listening to me. That's amulet.org. I've got a few more minutes left on my timer here. So has anybody got a question dying to ask about cover and the most exciting thing they've heard all day? This is fine. Excellent beard, by the way. Do we go to the same barber?
Possibly. I had a question about the number of clients you're bringing on. Do you limit that based on how much you have in your protocol fund so that you're not overextending cover in case they all claim?
It's a very key point. So the question, for all those who didn't actually hear, is about in terms of total capacity and what we can do. And it's a massive issue for all insurance firms and all cover firms. And essentially, yes, we're limited by how much capital is staked in our pools before we can actually issue new policies on top. So that is all controlled automatically within inside the PCR, and it's a big part of our designing process. Yes, that's in short. Anybody else got any other questions? We've got 3.5 minutes left.
I've got one regarding the expansion of types of insurance you could offer.
Yep.
So the ones you've got look great. Do you envisage being able to expand that out to cover a wider range of DeFi products? And is there an element of contagion risk within the protocol whereby the principal would ever be at risk, or is it inherently designed to scale so that that's never the case?
Two very good questions. I'm going to answer the second one first because it's a very quick answer. Essentially, is there a contagion risk? No. But, and there is a big but to that, if there's a black swan event large enough to take out a chain or many, many multiple protocols all at the same time, that is where there is a major issue for not just us, but any insurance protocol or cover protocol. Now, the likelihood of that happening is infinitesimally small, which is why we have designed that into our risk models. The other question was in terms of what we're doing in the future and other products that we can add. In short, we are driven by the demand. We're driven by where people want to get the cover. So what we're finding with our customers is that they're coming to us with innovative ideas on things that we haven't thought of as they need to get cover. What we're often finding is that our customers are working with JP Morgan, Goldman Sachs, BlackRock, and they need these large amounts of cover in order to drive those guys into their own protocol. So where do they get it from? You can't go to Lloyd's. You can't go to the traditional insurers. They just shut the door to you. We understand the risk. We understand the problems, and we design a product specifically for them that works.